Hey guys, Josiah here from EasyCaters.com. Today I'm going to do a quick video on some price action principles that I think are important and that I've been kind of making some adjustments and trying to implement in my own trading. Some things that I've learned about price action recently and that I think you'll find helpful in your own trading. So this is going to be related to price action and risk to reward ratio and how those two are related. This was a trade stock that I was trading earlier in the day. I'm usually a day trader. I usually uh, look for trades that I can just hold for a few minutes, and I base most of my trades off of price action principles and relative volume signals that I have developed. But in this case, this was an earnings gap today, and so I knew there was there were a lot of eyes on it. It's an in-play stock. This is MU, by the way, and it's it's got a context of strength. If we switch back out here to the daily, uh, there was a couple things I already knew about this stock. One is that it got really oversold down here, and it was a value stock at this point. Uh, Down in this area, this was one of the cheapest stocks uh, in the stock universe out there. And so I knew value buyers were going to be interested in it down at these levels. And so we're just getting off of those levels. We came out, broke out, retested. And so I knew this was, potentially going to be starting a reversal just based on those factors. Then, if we look at the daily time frame here, just the price action, we see here that we had a deep pullback, attempt to go lower that failed and stopped the shorts out. And then we had this high volume churn day yesterday because of the earnings report that was coming out in the afternoon. I believe it was afternoon earnings. I don't really look at the earnings reports myself or anything like that. I look for these volume signals, and I can see that it has earnings here, and so that lends itself to the trade as being this is probably an in-play stock and so forth. So seeing this churn, seeing that it has earnings, seeing that there's a strong gap up, that it's gapping over this red bar, over these levels here, re-challenging this pivot. These are all things that I look for when looking for a day tradable stock. And so then this morning, because of all those factors, I immediately recognized that this was probably a strong long candidate and looked at it on the 2 minute. Normally, if a stock is not, that in play, I'm not going to be looking at it on a 2 minute. But because of this one, and because I know this one is super liquid as well, I was willing to get in on a smaller time frame. And so essentially, we had this strong opening candle, closed near the highs. We had this pullback. Volume started to pick up. Now, there wasn't any particular volume signal that came into this. I just saw that this was a strong stock. It was probably going higher, and I had an entry. And so this entry, I trailed my buy stop down to here, and I just took it based on this candle here. And it was sized. I was aiming for 2 Rs here, 2 risk units, 2 times my risk. It didn't quite get there, and actually I had recognized that there was a 25 level there, $0.25 that would probably see some resistance. And so I went ahead and trailed just under that, or pulled my target just under that to take me out around, I think it was 22 or 23, something like that. So it wasn't a huge winner or anything, but it kind of illustrates well what this principle is, and that is that price action is directly related and proportional to the orders that people place. So you'll see here we have this pullback, and a lot of people got in on the break above this candle. along with me. And so all those traders are going to be interested in, or starting to get interested in, getting out around the 2R mark, 2 times the risk. And some of them will hold on to a portion of their position through a deep pullback, and they'll wait for a larger target, which just did get to 4 times their risk, 4Rs, right up here. And it's no coincidence that price stalled out right there at the 4R mark. So I just wanted to kind of demonstrate how price action is proportional to the entries that people take. When it's not like you're the only one that sees this type of entry, and if you trade these types of price action entries, then your orders are going to be sitting around this range. They're going to be clustered in this area, and you'll notice here. So that was one thing. These entries were all proportional to this entry. All these price action things, or features, I guess is what I would call them, are going to be related to this initial cluster of orders that happened early in the morning. And so I'll drag this over here so I can demonstrate that a little bit better. But yeah, so you can see that price got to 2Rs here, 2 risk units, and then it did a deep pullback. And those people that stayed it, so a lot of people dumped their shares immediately after 2Rs or stopped out because they didn't take target. And then the people that held, some of the people were holding from this time, this entry, and some people started seeing, okay, we're pulling back, I'll buy this pullback. So more people started piling in. These people were holding some of their shares, and it was already trending up in general. So then the stock turned around and started heading to, initially it paused at 2Rs, broke through it, it broke through 2Rs and then pulled back and tested it as support, and then went to the 4R target. And so those are directly proportional to this initial entry candle. Now, another thing you'll notice is that subsequent entries after the initial entry tend to develop in proportionality as well. So, this candle down here was something like a 40-cent stop. This candle here, I don't know what the range is, but so let's see, that's 83 by 60. So it's approximately 20 cents. And so the people that got in on a break above this candle needed 40 cents to get to 2Rs. Whereas this person down here that got in over this candle needed 80 cents. So it's interesting that you'll see wide candles develop at the start of moves, and then we'll get narrower candles that offer a risk to reward to the same location as this initial order. You'll see here, they're not ever going to be exact, but the orders get clustered in this area. And so these people bought in, and they're waiting for this area. Then these people got a smaller stop, an opportunity with a smaller stop, and they can pile in more shares. And so they have a target in this same area as well. And so that adds to the selling pressure once we get up there, that there's more sellers than buyers at this point temporarily, and so we trade back down to the target. Now you'll see this on all time frames. Subsequent entries that happen after a new trend starts like this. So this is a small trend intraday, and so you'll see that subsequent entries tend to offer a target in the general area of this initial entry. Because people are just not going to be willing to trade that entry if they don't have an attractive nearby target. Let's see here. Now, I wanted to show also that if you don't take the 2 minute, it doesn't really matter. This is pretty applicable on all time frames. If you see here, the later entry at on the 5 minute, pullback. and it got to 4 hours as well. And this was, that entry that I showed you on the 2 minute. Well, it's less risky on the 5 minute because there's more people that are going to be trading the 5 minute and so forth. So it got to 4 hours as well, and then stalled out at that point. We had a reattempt here with some people that bought in over this, and that one didn't work out. We also had a 15 minute. I'm sure we probably had a 10 minute too. Yeah, looks like there's a 10 minute right there. 10 minute from the high to the low. That worked perfectly for 2 hours. Installed out exactly on time. And then on the 15 minute, we had a nice little entry over this open. Stop under the close, or you could say on the low of this green bar, and that got to exactly 2 hours, just like on the 10 minute. So what I'm trying to say here is that all of these targets that develop, these pivot points that develop, not all of them, but you'll notice on the more liquid stocks, the in-play stocks that are trending really well, and those price action tends to be related to the prior entries that the public has already participated in. And it makes pretty logical sense if you think about it. The market is real people trading, with real orders, and they, are trading on, with a lot of the same methodologies in some ways. And so, it makes perfect sense that targets would develop, or price actions would reflect those traders' collective, trading plan or trading methodology or management plan, that type of thing. So if a high percentage of people out there are taking this kind of entry and trading for 2 hours, then targets will start to develop at 2 hours, or pivots will start to develop at 2 hours, and so forth. Another concept I wanted to cover, which I don't think I've touched on yet, which is the risk to reward ratio being important for whether or not a trade works. So we can have, say in this pullback here, we had one buy setup here that failed. So we have this green candle that developed. Some people tried to buy the break of that and take it back up to the high day. So a lot of people were just anxious to get back in this because they knew it was uptrending strongly and all that. But if you notice here, the risk to reward ratio is off. The stock would have had to get up way over this pivot for these people to have made any money. And so we wait until the risk to reward back to the top of the pivot becomes attractive enough to trade. So I don't know if it was this red candle here. It looks like that would have probably still been a little bit too high, but if you took it on a break of this kind of bottoming tail candle, that would have been pretty ideal. Let's see here. Let me zoom in a little bit better here. Well, that didn't really help because it's too squished. So let's make a little bit more room. So on a break above this candle, we got to 2 hours right around the high of the day here. And so this pullback became attractive as a tradable setup once we got down to a level where we knew that we would have at least 2 hours to our benefit without having to break that high. And so, the price might continue on and go ahead and break the high, but we don't have to count on that because we have room to the high of the day to take to our target. So I wanted to note that as well, that stop taking these trades that just give you any old buy setup. If the risk to reward isn't there, wait for a better risk to reward ratio. That's not going to always be the case. Like here, I took a setup that didn't have a good risk to reward to the high of the day, which was only a few pennies above my entry. But it did give me, what it did give me was more attractive than just a breakout of this high. So I think we had pretty much equal highs up here on these two candles, and I don't buy high of day breakouts. I buy lower highs or, the opens of a lower candle or so forth. So I look for pulls back off the high before I'm interested in getting into a stock. And so this is a lot more attractive than just buying the break of this. It gives you and especially when you account for the fact that if you notice here, the stop placed under here would have been at 1R just on a quick break above the high. So it would have reached a 1R target almost immediately. And you can see this candle developed right there, which is kind of like the first little pullback in this trend or whatever. So anyway, hopefully this is helping a little bit with price action. There are lots of examples of this that I see all the time, but I thought MU was a pretty good example of that today. So I wanted to kind of go over that. You'll notice that a lot of these pauses in trends happen at the 1R, 2R, 3R, 4R marks. That's another thing that that I wanted to note, because people are adjusting their positions at these junctures as they reach 2, 3, 4, 5 times their risk unit. They're going to be adjusting their positions at those places, either buying new shares along the way or stopping out of old shares. And so anyway, hopefully this is helpful. I just find these types of things interesting. I think not many people are thinking about price action in that way. So I thought I would kind of go over those concepts and show the way I look at price action, and hopefully somebody will find some value on that. Anyway, until next time, we will talk to you later. Please feel free to check out my website at easycaters.com. And if this has been valuable, please hit like and subscribe. And I'll keep doing these videos as often as I have something to say. We'll talk to you next time. Thanks.